Thanks for tuning into Stocks with Antonio. What a week for the stock market, right? We have a lot of earnings coming out. Jerome Powell is going to be speaking for the last time tomorrow, Wednesday at 2 p.m. So we want to pay close attention to what he says because even though it's the last time he gets up and speaks, what he says can impact the stock market. So if you're an investor, especially a short-term investor, we want to pay close attention to what he says because it is going to have some type of impact, either downwards or up in the stock market. So keep an eye out for that. That's going to be important. We had some earnings come out today, Tuesday. Two of the companies that came out that I think a lot of people are going to be interested in is Hood and Starbucks. Now, Hood, if you look at the stock price, you see that selling off after hours and it's dropping. I know Robinhood's pretty popular, ticker symbol HOOD. You may be wondering, do I hold this in my portfolio? I actually don't have a Robinhood account and I don't have Robinhood shares. Now, it doesn't mean that it's a bad company or anything, but the reason the shares are falling is after the release of their results, it missed Wall Street's expectations with weaker crypto trading revenue being a major drag, right? Reported crypto revenue fell 47%. So it didn't meet Wall Street expectations when it came to their crypto. That revenue is falling quite a bit. And obviously, investors don't want to see that, right? Investors want to see expectations when earnings come out to be beaten. They want to see good forward guidance. They want to see, they don't want to see revenue declining in any part of the company. They want to get positive news. And a lot of retail investors don't see this or don't realize this at times, but we are investing in the future, right? Because we want to know that the company's currently doing well. But why would you invest in it if they don't continue to plan to grow and grow the revenue and become more profitable? If you don't see that in a company, you're not going to invest in it because what would you be investing in, right? If the company's sales are going down, revenue is going down, if you're seeing negative things, then that makes extremely risky and a greater risk of you losing your money when you can put it into something safer. So I believe that's why it's very important to pay close attention to earnings because you want to make sure that the companies that you are investing into are showing that they're doing strong and they're going to continue to do strong by having a strong forward guidance, right? Good forward guidance. So those are things to pay attention to. But I just wanted to go briefly over why Hood is dropping right now. Now, it doesn't mean it's a bad company, right? As the stock price declines, there could be an opportunity for you to get into it because even though they didn't beat and they shared some some things that could be seen as are negative, right, to investors, there was some good in there, right? So Hood's not a bad company, but I would wait for a pullback if it's a company that you're interested in before getting into a position if you currently don't hold it. Now, that's just my opinion. I'm not a financial advisor, so I cannot tell you what to buy, hold, or sell, but I can tell you what I think and what I'm going to be doing. Now, Starbucks did come out, and Starbucks did great on their earnings, right? And you can see their stock price, they're actually moving up, and they broke the $100 per share after hours. So let's give you a little reason why. Starbucks reported strong earnings, beat today, and raised forward guidance. See, that's what's important. That's what's important. They beat and they gave a good forward guidance, which is why the stock is moving higher after hours. Those are the type of things you want to see in a company. So right now, Starbucks looks like they're turning things around because they have been slowing down, but it looks like things are picking up for them again. I think Starbucks is actually a company that I never bought shares in, but it has crossed my mind a few times, and I wish I would have had a position in Starbucks, but I currently don't. But I may be getting into Starbucks. I think Starbucks is a good company, and it's good to add in the long-term portfolio. Now, I'm going to be honest with you. I do make a lot of videos, and a lot of my videos talk about short-term trading because I started doing that last year. But I've been investing long-term for over 10 years, and I've seen my portfolio grow, from doing long-term investing. And I'm a big believer in long-term investing. And actually, when I do short-term, when I do option plays, and I make money doing shorts and things like that, I take some of those gains and I invest into my long-term portfolio, because what's truly going to help you build wealth is investing in your long-term portfolios. There are companies out there like Walmart, Amazon, Facebook. You just go back and do research. If you would have just invested $1,000, now it would have been years ago, right? And you never sold and you reinvested all your dividends, you could be a millionaire. Now, it wouldn't have happened overnight, right? Some of them would have been quicker than others, but long term, some of these companies have made individuals rich. So imagine you're just a 9 to 5. You're not an entrepreneur person. You just want to go to work. You're not looking to take risk of starting a business or anything. You can go ahead and invest in some of these great assets in the stock market and just focus on putting money into it every month, an amount that you feel comfortable with, and kind of just forget about it. And it could change your life 20 years from now, right? And I know a lot of people that don't have any stocks. And guess what? If you're blessed, to be around 20 years from now, some people didn't invest in any stocks and they're still around and they have no money for retirement. They have very little. So investing, I think, is a great opportunity for a lot of individuals to build wealth. You just want to make sure you're investing in good assets. So I throw that out there because if you're not investing, if you don't have a brokerage account, if you are working a 9 to 5 and you're not, the company offers a 401k or retirement, you're not taking benefit of any of that. And there's people like that. You want to go ahead and look into that, because you don't want to reach 65, 70, whatever age is your retirement, if you make it, and not have any money set aside. Hopefully when you get to retirement age, you have options of you work if you want to, not because you have to, and you're set up financially. Now, obviously, we would all prefer to be rich right now. And you're not saying that you have to wait 20 years, right? You might start short-term trading. You may get really good at it. You may do some other things and it may come sooner. But if some people that I talk to, they're like, hey, I don't want to do anything risky. I love my job. I want to do my 30 years working. And some people I talk to are like, oh, I don't even want to work 30 years. I want to retire early. I want to do other things. So it's going to change, right? Obviously, some people are like, hey, I want to quit my 9 to 5 today if I can and do something else. Some people are like, hey, I like my job. I just want a calm, peaceful life. Whatever it is, if you're watching this, obviously stocks catch your interest. And I'm telling you, if you're investing in good companies and you're buying good companies, the best thing to do is to keep them. That's just my opinion. And some of the companies are coming out with earnings tomorrow. That's what I've been doing. I bought them a few years ago and I haven't sold them. I just continue to dollar cost average and they keep growing. And even when there's fear that, for these companies, people are thinking, hey, they're going to get taken over or whatever. They continue to dominate. They continue to, overcome their obstacles and they continue to grow. And one of these companies that are coming out with earnings, Amazon. Amazon, I got it back actually, it's not that long ago in 2022. I did my entry and it was at $140 a share, around that. And some people are saying, hey, man, that's kind of expensive. And look at Amazon today. We're in 2026 and Amazon's over $260 a share. Now, it doesn't mean it won't pull back, but imagine where Amazon could be 10 years from now. And in my opinion, it's going to be a lot higher than where it currently is. A lot of these companies are at the price that you're seeing because they've run up and they did splits. And then the share price came down. But one point in time, Amazon was trading over $3,000 a share. The reason you're even seeing it at 260 is because they did a split and then they were able to bring the price down, right, to have more investors buy into Amazon to not get scared away when they saw a $3,000 per share price. And there's other companies that's happened to. Chipotle, believe it or not, used to trade at over $1,000 a share, and then it did a massive stock split. Now, I didn't bring to throw Chipotle in the mix, but I'm just saying a lot of these companies have run up and they do stock splits and they do them a few times depending, on it varies with companies, but that gives the investors a lot more shares, and if they continue to run up, that's how you can build wealth. So if you do have stocks and you feel like you invested in a good company and they do the dividends, what I do, I reinvest that dividends. I continue increasing my position on pullbacks and I continue to DCA, and I've seen my portfolio really grow. And some of the stocks I have in there are from the Mag 7 and they've really helped my portfolio. So I'm looking forward to Amazon's earnings tomorrow. Google's coming out, Microsoft, Meta. Now, out of these, the ones that I have in my portfolio, I got Google, I got Amazon, and I got Meta. I I got Amazon, Google, and Meta. I don't have Microsoft, but I think right now where Microsoft is, it is an opportunity to get some shares. Now, I'm not telling you to do that, but I think it's at a good price, right? It's under $500 a share, not a bad entry point. This stock was over $600. I don't see Microsoft going anywhere. It's going to continue to be a major player, and I believe these are opportunities. That's what you want to look for. Great companies that you believe are going to be around for long term, and that you can find attractive price to at least get in, right? And then start increasing your position over time. And I think Microsoft is a good opportunity. I think Meta is a good opportunity as well because this stock was, I believe it went all the way over to $800 a share. I know it was in the 700s, and I believe if they weren't spending so much in AI and didn't freak out investors so much about how much you're spending, they would be $1,000 stock. And I believe they will be $1,000 stock one day, but we want to pay close attention to earnings because if they don't, if depending on the earnings for Meta, the stock could go right back under 600 or it could shoot up over 700. So it's going to be a mover. For those of you that do options, just right now because Meta's coming out with earnings, see how much an options call costs. It's through the roof. I just looked at it and just to do a call or put on it and cost you an arm and a leg. So definitely don't recommend doing uh any option plays for on Meta, but that's up to you if you want to do that. But yeah, I believe these companies that are coming out tomorrow are really going to help this market. Depending on how these earnings come out, if they come out good, I think the stock market is going to move higher. These companies will take the stock market higher. Also, I do believe because Jerome Powell is going to be getting replaced by Kevin Warsh, however you say his last name. Sorry if I mispronounced it. Trump's already said that he's going to cut rates. So I believe he will. When he gets in, when he takes over, he will cut rates. So I believe if these companies come out with good earnings, if we get good news about the war coming to an end, it's a midterm year, so I believe we will end this war soon or come out with some more positive news because of midterms. I believe towards the end of the year we're going to get rate cuts, and if these companies beat their earnings, I say that's a recipe for this market to go higher. So I'm bullish for 2026. I'm even bullisher for 2027. And I'm looking for opportunities to continue to increase my position size in these companies. Now, I'm not buying right now. I'm going to wait for pullbacks, but I am going to continue growing my long-term portfolio, and I'm looking for short-term plays. Now, you may be wondering, hey, do you have any swing trades right now or anything like that? Right now, I just want to see what happens tomorrow. Actually two that I do have in mind. A small cap one is Serve Robotics. I'm thinking about doing a call on it. That's a call on Serve before its earnings. So I'll sell out it before earnings, but up to earnings. Historically, if you do some research, Serve has run up before earnings. So I may do that. If I do that, I'll probably do a strike price of $10 since right now it's around $9. That's what I'm thinking about doing. And Palantir, I'm going to be watching it because if Palantir can go over $150 a share, I think it's going to be bullish and going to go. That's when it's going to make a run up. So I'm going to be looking at those two. I'm watching those two. I'm probably going to be getting into Serve though pretty soon. Probably this week, to be honest with you, and then I'm going to be keeping an eye on Palantir. So those are some of the plays that I have in mind right now. Just sharing it with you. Let me know if you're bullish for 2026. What's your outlook? Let me know down in the comments below. If you haven't done so, smash the like button. Let me know if you're making money in this market. And also do me a huge favor. Subscribe to the channel if you haven't done so, and check out the description box. Thanks for watching. Thanks for your time, and I'll see you on the next one.